Hello, everybody. It's Mark here at TSLA, and unfortunately, Tesla closed in the green, kind of taking away the gains that we had yesterday, and it did it in rapid fashion. We kind of talked about that possibility yesterday, so if you want to listen to what we talked about as far as the potential price action for today, it played out a little bit in the way we thought it would, and we'll talk about it later. The closing price was $253.86, which is a $5.46 drop from yesterday. Translated to a percentage, it's negative 2.11%. And before we dive into the charts, let's take a look at some macroeconomic stuff. We're not going to really discuss any Tesla specific news. There isn't really much going on in that world other than, normal Tesla stuff. But as far as things that affect the price action, nothing too much in that front. So the first things first, we'll look at non-farm payrolls. It was coming out today at 187,000 jobs added. And the expectation was 200,000. Now, there were downward revisions to two previous months. So the higher numbers of jobs for May and June, those are not what we thought they were. They weren't as hot as we thought they were. And even in this job number, the 197, it does miss to the downside. But the quality of all these jobs for many, many, many months now has been part-time jobs, and they're just outpacing full-time jobs to the extent that there's full-time job loss and part-time job gains. And I don't know how they kind of reconcile that in their numbers, but the reality is the quality of jobs is going down. Though the hourly wages year over year has increased by, what is it, 0.2%? Flat year over year. But the problem is month over month, it's 0.4% to 0.3% expectation. So, the Fed wants to see job creation taper off, yes. And we're kind of seeing that in the non-farm payrolls. And don't even talk about the fucking ADP private payroll. I don't know if anyone actually listens to that. But anyways, you need to see hourly wages kind of come in. And I'm not saying that I want people to make less money, but if you want interest rates to stop going up, and if you want them to start cutting sooner rather than later, they need to see wages stagnate or maybe come down a little bit in comparison to the year before or the month before. We're not getting that, but maybe eventually it will come around, but the quality of jobs is getting lower. We're not really blowing out expectations when it comes to job creation on non-farm. ADP, I don't think anyone's, like I said, no one's really paying attention to that. So here's the economic data for next week. So Monday, consumer credit, credit's going to be bad probably. And that's not necessarily a bad thing. You don't want to see consumers taking out too much credit. But the miss last month was substantial, and it kind of signals to the Fed like, hey, like what you want businesses to completely fail? I mean, if that's what you want, Tesla's going to go down with them. People need to buy cars on credit. So on Tuesday we got some speakers and wholesale inventories, trade balance. Thursday we have the big stuff, so nothing on Wednesday. Thursday's the big stuff. It's going to be, of course, initial jobless claims, but more importantly, CPI. So CPI is going to be coming out. They're expecting a 3.3 year over year, 4.7 on core year over year. Like I keep saying all the time, when it comes to core, we always need to see core beat by 1 to 0.2%. We want to see headline slightly beat, but headline is not as important as core. This is the stuff you see in headlines and newspapers, though. Like, this is the stuff that people talk about when it comes to inflation on just water cooler talk, or just like talking amongst friends and family. This is an important number in that sense, because that's the number that is kind of touted as the progression of our fight against inflation, if it's doing well or not. So we'd like to see this headline come in, but ultimately having misses on the core is everything. Treasury budget, meh. We know the Treasury budget. They're just gonna issue they're issuing hundreds of billions of dollars in notes and bills and bonds. Friday, core CPI. I'm sorry, core PPI. So we had core CPI, and Friday is going to be PPI. And we talked about how price action kind of works with CPI. Sometimes, even if we have this great And it also depends on the action during the course of the week. Like if we're pretty red into Thursday, maybe you will see more green on Thursday after the CPI report comes out. But sometimes you might get a small bump, and you don't really get the price action you thought it would be, even if you have this great inflation report, because they're looking for confirmation on PPI as far as the report the day after. But if we are somehow green Monday, Tuesday, and Wednesday, because we've been selling off a little bit, but if we continue to be red, you can maybe play for a bounce on CPI and PPI, but kind of be long date your options and understand you might have to hold for a couple of days, so you need duration to make sure you capture the move you want to capture. But if somehow we bull on Monday and Tuesday, there's really not much reason we would. I think the effects of Apple would drag this market down a little bit. I'm going to look at that later. But so CPI and PPI, and that's going to be later on in the week. So either you see kind of red days next week, or like green days without much enthusiasm, or green days that are sold into red days just because people are going to want to maybe de-risk going into these inflation reports. And it seems like we have inflation reports every week, right? Not so great. As far as the macro stuff, again, we have another slate of earnings. Nothing as big as last week or this week that just completed, and last week. So it's a lot of smaller names and some meme names that you want to kind of be aware of if you're kind of playing them. And I'm talking about Upstart, Palantir, Lucid, AMC, not really Roblox, but these smaller cap names, some Chinese automaker names if you play them, or if you're invested in them. So we have Li Auto, we have Alibaba, Li Auto, and of course we have Alibaba. I would say I don't think anything here would really move the market or be able to save the market. So nothing too important other than maybe Berkshire. What about how Tesla's options evolved during the last course of the day? And as you can see, just as we thought, the amount of options, the volume of them skyrockets on the last day. A lot of people playing 0 day to expiration options. And now you can kind of understand why things happen the way they did. So just keep note of this. There was a lot of interest at the 260 for the calls. And this was initially around 265 in the morning, and it all kind of gravitated to 260, and they got destroyed, unfortunately. And the puts got paid out almost in their entirety. So we closed at 253. So all of these puts, the 160,000, 255s, the 260s got paid out in the tune of 124,000 almost. And so a couple tens of thousands in higher strikes. Really brutal for anyone bullish on anything today. And last thing before we go to the charts, I want you to just kind of take a look at this Apple chart and understand that, number one, Apple closed at almost $82, and look at the calls that were all building up. And these 220s were from before the earnings, of course, but look at all these calls that were building up at the 185, 187, and 190. And this was accomplished by the price action of today, which was flat until 2 p.m. And at 2 p.m., all the puts basically got paid out over here. Also, you can see how there are more calls than puts for Apple. And you can say the same for Tesla. There was too much bullishness. And that's kind of what the market wants. As it sells off, it wants to keep a little bit of optimism, some hope before they pull out the rug on you. And essentially that just means selling everything they can very quickly and creating this like cascading downward momentum whenever they feel like they want to do it. So we'll go ahead and switch back to the charts and look at Tesla. Now, we talked about how Tesla needed to kind of capture a higher high, but we wouldn't be surprised if it did the following. So here's let's go on a smaller time frame. Here's the minute chart. And what did we talk about yesterday? We talked about how after the earnings, like we expected that Tesla would gap up, and it did. It gapped to the 260 like we probably thought, and it hit a 262. And what would we say yesterday? It would have to be fast. If it hits 262, what do? That's your first opportunity to go short. It's your first opportunity to sell a call, which I did. What if it hits 265? So it almost got to 265. It was at 264, like 70 something. It was very, very close. And it happened, and I mentioned, it happens very quickly. You have to be really, really quick to capture these moves. If it hits 265, you're selling another call or you're buying puts or something. That's what I did. That's not, of course, not financial advice, but that's what I did. And I told you guys yesterday that you were going to see that move up in the morning and it's going to sell off really, really quickly. And it did. It did just that. It did it so pretty violently. If you want to just measure the drop over the course of the morning, that was almost 3% for the morning. And if you want to go from the high of the day to the close of the day, it's 4.15%. With a move somewhere around 4.3% at its most. So we see the reason we talk about this is because we see it kind of in the morning, it'll go up, it sells off all day, and that's the action. So it goes up here, gaps up, sells off all day long. Gaps up here, it sells off all day long. It gaps down, recovers into the green, sells off all day. How about here? Gaps up, sells off all day long, closes lower. Just very similar price action to today. This is kind of modus operandi when it comes to Tesla when people are distributing shares. So that when someone talks about distribution, that's essentially what is happening is they have a bunch of shares, right? They want to get rid of these shares. So they are spreading it out amongst the people who want it. And like I said, they do it in kind of a manner that will allow them to get the most they can for their shares. How do they do that? Create some excitement with the futures market in the morning, or get it bought up in the morning pre-market, so it gaps up and kind of creates that buzz. Like, okay, things are okay. I can buy Tesla again, and people start buying Tesla in the open. They're like, I don't want to miss this move. And when pricing gets to where they just sell everything they have to anyone who has open buy orders. And that's why the pricing kind of cascades. They're trying to find the best pricing and get out of either their trade or get out of the things they've been holding for days, weeks, months. But every time we gap up, you'll sell off. And until we stop doing that consistently, you're seeing it over and over again. It just sells off in the morning until you see it consistently maintain some type of price like we did yesterday, which was a really good price action. You're gonna have this really bearish price action consistently. People do not want to be in the stock. They don't want to be at risk with something that's very risky, meaning that it moves so violently, like in Tesla. And the Apple earnings kind of sold it. We were kind of bearish yesterday because even though we had good price action during the day, we know that Apple is such a big weight to the market. We showed you the options volume for Apple's options expiring today. Let's take a quick look at that. So you can see here that Apple was flat until 2 p.m. So this is a 2 p.m. sell-off. Once 2 p.m. hit, it was an automatic sell for them. But it kind of shows you what was, if you just, I know it's technical analysis, not for everybody, and this might be kind of rudimentary, but this is a very simple kind of like compression of price, this type of triangle pattern. You can say it's like a pennant, and if you count like the pre-market and post trading price action, you're basically forming this, which is kind of like this pole into a pennant, and it just compresses the pricing, and it'll eventually break down. Like, can this break up? Not in this. I don't think in this particular pattern this is something I'd really count on for it to break up. I said what you're seeing in this type of price action, so in the future you can understand, but it's hard to understand at the same time because we've seen days where we trade flat the entire day, but this traded flat for most of the day and did sell off in the last couple hours. So you have to be kind of on your toes at this moment. I did have puts here on Apple because I was looking at this. I'm like, okay, the action is, in my mind, if I was going to be a market maker, if I'm going to be a fund manager, I'm just trying to keep this pricing stable. I'm buying a little bit here and now there just to keep it stable at 185 for as long as I can. So what am I doing? Number one, I'm trying to convince people that even with really bad earnings, I'm going to try to prop this price up and protect 185. Because you can make people think that 185 is the put floor you're trying to protect. The reality that there is no put floor at 185 in the sense that all the puts got paid out basically. But if I was running around with billions of dollars, that's what I'd be doing. I'd be just placing orders at the 184.80 to the 185 mark and keep pricing kind of pinned to that 185. You get people pretty complacent, you get them tired out, you get them trying to go long, you get them trying to go short, you get them worn out until what you're trying to do is you're going to accumulate the shorts. So you're propping up the price, you're trying to keep other people interested, and you're going to accumulate your position. So they're accumulating their puts, they're going short, and then when they accumulate it enough, they can sell it enough, drive the price down, and take the entire index and other stocks with them. That's essentially what happened. No, they didn't want people to get an easy play when it came to Apple. They want people to close out their options. Like if you got a nice put in this situation in the morning, they want you to close it out. They want only their puts to be in the system, and you gotta kind of have to watch out for that. Apple's earnings were just not great enough in a way that its run up would even base. You couldn't consolidate with that type of earnings report after going up a considerable amount for Apple this year. So I know a lot of people, if you're buying, you might not feel bad because maybe you bought in January where Apple was like $125, $127. You might not feel bad by going down 5% in a day or two, but if you look, and we looked at this before, we looked at Apple's price action, and even though you would think Apple as being that kind of mainstay in people's portfolios, anchors their retirement, everyone is counting on Apple to do okay. But when Apple does start to reverse, it's really no different than, let's say, Tesla, where the reverses can be pretty substantial. And we can see these peaks here from, let's say, March of last year. So it had a nice run up. It ran up 20% and then completely sold off. And that looked like a 28% drop. And these are really because of inflation back in the day. How about the drop in the post Jackson Hole? At the very low, it was around 24%. How about, what is this? End of last year, from October down to the doldrums of December, that was 20%. How about even just from these smaller moves right here? That was 15%, 14%. And what I'm trying to show you is that, yeah, we might not think about it anymore, but Apple can move down in a way that can be very Tesla-like. And we're seeing percentages anywhere from, 11, 12, 13 to 24, 25%. So if we were to take it from the high, what does 11% look like? 11% would be $176. That sounds like a lot, right? Because it wasn't just but 198 a couple days ago. What does 15% look like? A 50% drop on Apple would be 167. What does the 25% look like? A 25% move down would take you to here, maybe allow you to clean up some gaps. But that would be $145, $46, $47 a share. Now, how long does it take to do that? Let's say if we're to use the Jackson Hole, that took 2 months of just selling. It can be brutal. How about in, what was this, March to May? That took 52 days. So these sell-offs I know these sell-offs are during some of the worst selling due to inflation in probably your trading career. But these sharp movements, now here's another 25.5% move, that took 20 days. So what can we expect, and why are we looking at Apple? It's because the weighting of Apple is going to drive the price action for the rest of the market. It just is. It'll drag down the S&P 500, it'll drag down the NASDAQ, it'll drag down the Dow. It's in all of these indexes. That's why it's so important, and something you have to kind of be aware of. Like, okay, even with decent news for Tesla, if that was to come out, you have to fight against this overall sentiment that, August is low volume. Apple is not doing great, and they're probably not going to do great for this whole quarter. People are on vacation right before their kids are going back to school. So there's a lot that's going to work against us, though I understand there are some seasonality charts that show things like Tesla have good end of August performance, and maybe so. But maybe we do sell off for 2 weeks because Apple is just not doing so hot. Now, can Apple kind of recover? Because they did beat. They beat on their EPS, they beat on the revenue. It was just that their iPhones and iPads didn't really have the same revenue that analysts were really thinking, but they made it up in other areas, be it the MacBook Pro sales, and their services. Services are doing really, really well. Now, it could turn around right here. I know we're talking about the peaks from beginning of last year, and we're not all that far from the peaks during the 2022 from the spring and for Jackson Hole. So there are opportunities to stop the diving of this price, but we don't know. It's something that you kind of have to be aware of. Am I hedged? Obviously I'm hedged. We talk about it every day that the overall price action, this is not conducive to upward sustained movement yet. Let's go back to Tesla though. Like I said, we basically kind of predicted that we'll probably move up and sell off really quickly. I hope you guys caught some of these moves just for your own hedging sake. And now that I would say most of this stuff is kind of invalidated when it comes to the potential patterns that we were talking about, I think we can go ahead and remove all the drawings. None of these are going to really help us anymore. So let's remove the drawings. And what do we have here? First thing, the kind of type of pattern we need to look at is, are we just flagging down? And did we already break down? Is this almost like a Google move? Google had a similar pattern, pretty picture perfect bear flags on Google last year. And it kind of gives me that same kind of thought by looking at the chart on this time frame. So we'll just make this a little bit thicker. So imagine this is your pole of a flag that's hanging upside down. Upside down flag would be like what people call like a bear flag. You can also call it different things. Let's say this is a flag. You can call that a flag if you want. But maybe it's not a flag. Maybe it's kind of a wedge pattern. But unfortunately, any way you kind of draw it, it's not looking all that great. It's really not looking great. I think the best thing to do is use the recent lows, excluding last couple days, and understand that, I mean, this is just terrible price action. And you can say maybe it's a falling wedge, but it's already broken through that support and it got back in and it's just out. I think what could happen here is, so we have Monday, right? So Monday's coming up. What do we want to look for? Well, let's say this trend line. I'm not a big fan of the diagonals. I understand that a lot of people aren't. But we'll just kind of use it as a reference point to kind of determine a price where we need to see if it's going to be defended as far as it being sold, hitting a point of what people call like liquidity, meaning that it gets to a certain price, there are a bunch of orders sitting there, and they get sold off really quickly. And you saw that happen here, of course, near the 265. At the max, it made 264.76. But if we were to see pricing get to, what is that going to be? 257? I think that could be a point on Monday if you see it go up. And this is the diagonal based off where the pricing kind of bounced earlier today. I'm sorry, this is the trend line where pricing bounced. If you see Tesla kind of make that move, now what would that move be in percentage-wise? 1.5%. If you can see Tesla get 1.5%, I think you need to take chips off the table and kind of de-risk a little bit. And like I mentioned yesterday, when it comes to like selling calls, just think about selling calls like you're buying a put. You can put stop losses on it. You don't have to be stuck. Don't feel like you're stuck in a covered call. Like, you have to understand that you can minimize your risk there by setting stop losses, just like if you're buying a put, right? So Like when you buy a put, you're going to put a stop loss in it, right? It's so different than selling a call. So if it does move past 257, then you can always just put, a 5-10% kind of stop loss on it, meaning that you're willing to lose 5 or 10% of the call you sold to close it out. But if you see a move at 1.5% and it kind of is testing this trend line, maybe I can clean this up on the smaller time frame and get something a little bit better. Not all that much better. But yeah, so just kind of keep out for, if there's any bullishness, you'll look for the 257 and 257.50 mark to think about, is it a time to go short? Is it a time to sell more calls against your shares and stuff like that? If you have calls that are already sold, you can kind of use that same marker to understand, like, okay, I have a bunch of calls sold. It's at 257. I don't want it to, if it goes above that, I might close out my calls, stuff like that. Because you're going to have 2.5, 3 days of theta loss. So you're going to have a buffer, because even though it's the weekend, it's Friday night, it's Monday morning, every minute has loss of premium, which is good for people who are selling calls, because time is an important factor in determining the value of an option, right? So even when weekends are going, it's a perfect time to sell calls. Long weekends due to holidays, perfect time to sell calls. You have 3.5 days of this theta just burning the premium away, which is perfect for you. But yeah, looking at Tesla though, there's really nothing to be really happy about. Like I said, we need to make definitive highs. Taking out other highs, for now, we're just making lows. I mean, if I was to kind of ignore the gap down and try to draw a diagonal trend line for Tesla based off these highs, the highs of note, it would look something like that. These are the highs you want to take out. Because for the short term, if you're not taking out any of these highs, what are you seeing? You're seeing just lower lows being made. We had a lower low on Wednesday. Okay, so what makes this even more super bearish? Are you already short? Like, I can't tell you if you should be short. I went a little bit short with calls sold because I just don't like the action. But what can convince you even more that this is just going to turn out very, very badly? Well, we're already seeing a lot of type of patterns, like we talked about it being kind of a falling wedge, which could also be just a flag, the bear flag being the more bearish of the two. But you're seeing kind of these breakdowns, these flagging type of breakdowns that just happen over and over again. And it's just because people really want to get out. They don't want to stay in it. They don't want to feel like they're pressured to stay in it. Look at, like, these patterns are just, they're very similar. They kind of play out very similar because it's the same thought process. They're looking for every opportunity to get out. Like, look at this. This is and this is why we knew this was going to happen. Like, this is just what Tesla's doing, unfortunately. It's not doing anything all that pretty when it comes to its price action and its patterns. So if we can break above 265, I mean, that's so unlikely. I mean, that's just so unlikely. I want it to happen, though. I really want it to happen badly. What would that need to be? If we can get, that's a lot. Okay, if we can get 4.5% in 1 or 2 days, that'd be awesome. That would look very much more. That would look very much more bullish, because we can just determine. We can use this 250 point bounce as the spring of a pattern that will eventually lead to an accumulation in upwards movement. But if you see pricing get below 250 by Monday, I think it will continue to sell, and it will sell faster and faster and faster. It will sell very fast. So we need to keep an eye on the gap. What else we need to keep an eye on? Bottom of the gap. And I just want to remind you guys, it looks far away in the way I'm zoomed out. Just know, to get to the top of the gap that we left behind a couple months ago, that is going to be a 4.7% move. To fill the gap entirely, 7.27%. can be done pretty easily in a couple days. Yeah, can be easily done in a couple days. So we mentioned before, what we're forming now is a head and shoulders like pattern. We were hoping that this wouldn't be the pattern that is forming, but it is forming in that way. And it's forming in a way that's even more bearish. And how it can be more bearish is the island reversal. We talked about the island reversal before. It's when you have a gap up and then a gap down, and it kind of leaves this price action kind of floating, and it's in that yellow color where you can see how the gaps work, where it's a reversal type of pattern, and you have this kind of flagging pattern. We can even call this an elaborate flag as well, and we can call this the pole again. You can see not too great. There. Okay. So your downside targets are obviously going to be the levels of the gap. You can make some arguments that we had strong buying here at 248 from July, but I just don't think that this action is going to have price memory from back then, from months ago. I just don't think that's going to be that important. I think you're going to find orders at the bottom of this gap just because people just have it put there. I've heard people say all the time, 240 looks like a good price to get back into Tesla. And you probably hear that from your friends too, or if you were to ask someone, like, where would you want to buy Tesla now? Like, how much do you want it to de-risk? How much would buying at 240, how much is that down from the earnings, right before earnings? To get to 240, that's an overall drop of almost 20%. That is not a bad entry point, I guess, considering. Let's go to a bigger time frame. Let's look at the hourly. Let's look at our indicators. Looking pretty oversold for a while on the hourly. RSI looks very oversold. This is just non-interest. There's just no one cares. MACD, even though it kind of crossed over, it's currently back down right now. RSI, stochastic RSI has more room to the downside. Yeah, I mean, not too great. Not too great at all. Let's bring up a volume profile and see if we can just kind of add that in. See if we can find an easy way. Volume profile. What is a good one? Does this help us? Periodic? It doesn't help us at all. No. How about a Bollinger Band? Is there any hope in the Bollinger Band? Okay, so in the Bollinger Band on the 4 hour, we're right at the bottom of it. How about on the day? Some more room to the downside in this correction. So when it corrects, you'd probably want to see on the daily time frame. You can see it here during the spring. When it was kind of quote unquote correcting or selling off, it would routinely peak out of the Bollinger Band before finding a base and coming up. But you can also kind of just make it and force it down for long periods of time. But we're not even there yet, so even to get to the bottom of the Bollinger Band and peeking through it, that'd be like maybe a 3.75% move, 4% move. It can be done in a day. It can be done in 2 days. And then maybe you'll have a chance to bounce. But at that point in time, but you're right above the gap. I mean, everything seems to kind of coalesce around that. It's unfortunate. How does the indicators look on the daily time frame? Looks like we have a little bit more downside for the RSI. Stochastic, it's been pretty hard sell. This could stay pretty hard sold for long periods of time. It wouldn't be surprising. Not at all. Like, look, if you can see, this is bottomed out, but you can see how it's sold over and over again. Even gap down 8% to keep selling another 7%, even though the stochastic RSI is showing complete oversold. MACD is still coming down. It is not curling up on the daily. And yeah, I mean, not too optimistic about it right now. So my suggestions, but not real advice. This is just what I'm doing. If anyone is interested in what I'm doing, it is I am selling calls and going short whenever there's a pop. Unfortunately, I was short. I sold a call when it was 264, when it was coming back down. You had to be really fast. I bought puts here when it was flagging. This is kind of like a flagging pattern. It's a typical bear flag, right? Sold call. I bought puts there, and I've held them all day long, and I'm holding them until the end of next week. I'm just trying to get through CPI, get through people digesting the Apple's earnings and what have you. Sorry, guys. But we kind of figured, though, right? Something to keep an eye out for. Oil has been very, very strong. Of course, this could affect inflation down the line, but also it could be a play to get some. If you need some beta, if you want to look for plays, look outside of some equities for now. There's some decent equities. I mean, Amazon still look pretty strong. I see no reason why Google is selling off, but yeah, Tesla is being Tesla, and even though it's been pretty painful for the past couple of days, it is not even into a Tesla-like correction, right? We said it's been 15%, and 50% is not that big of a Tesla correction. Let's remind ourselves so we know when it's okay to go short. What does it really need to be? How about 22%? A correction for 22%? Or 25%? 34%? On a bigger time frame, that could be even 41%. Peak to trough here from April to May 22, 46%. When Elon bought Twitter, 67%. How about an inter-range correction? This was during the high of the range to the low of the range during spring of this year, 23, 24%. So we've only corrected 15%. And it feels like, for me, it feels like the whole world is just horrible. But yeah, it's only been 15%. Something to keep in mind. Okay, guys. Have a good weekend. Thanks for listening. Bye.